Okay, good afternoon, everybody. I want to thank you for taking the time out to be on our webinar this afternoon. Ogletree Financial Services here in Auburn, Alabama would like to just introduce a couple people on the call today. Our partner David Whitehead down in Gulfport, Mississippi, who heads up our mortgage protection, and also Jimmy Pyron, who team up with David down there. And you know, if you have questions on anything that we talk about today, we're going to get their phone numbers out to you so that you can give them a call. But I'd like to introduce John O'Keefe, who's with Assurity Life. He's going to be doing our presentation today, and John just informed us that he's moving out of the home office and he's going to be an external traveling around to different parts of the country. So that's exciting for John, but we do get to use him one last time here to bring us the information on the Assurity Nonmed 350 and the 350 Plus and the AxiFlex. So we're going to talk to you about those products. We're going to couple it in with a few sales ideas, and then you know, I think a lot of you already know about our mortgage protection lead program. That it's really scooping up a ton of leads for our agents. Some of the country is experiencing as much as a 14% response rate on their mailers. So let's bring in mortgage protection leads down to $8 to $10 a piece, and you can't beat that. So whether it's product questions that you have or lead questions, be sure to give David and Jimmy a call after the webinar here today. But John, I'm going to go ahead and hand it over to you and see what you got to show us today.
Well, thank you, sir. And thank you, everybody, for joining us on this webinar today. Hopefully by the end of the presentation you've learned a little bit about the product, a couple different ways to present it, and hopefully, of course, you're thinking about folks that this would apply to in your future sales. First, I want to give you a little information about Assurity and our history. Assurity Life Insurance Company is a mutual company that is made up of 3 predecessors dating back to the 1890s. You can take great comfort in knowing that these longtime companies successfully weathered many recessions, the Great Depression of the 1930s, and world wars. Throughout these difficult periods, the companies were managed with great discipline and long-term focus. As a result, we've always honored the promises we've made to our policyholders. Now, our rating is excellent with AM Best and has been steady for the past decade, and it continues to hold a positive outlook for the future and our financial strength. Assurity prides itself not only in a strong product portfolio, but also the best-in-class customer service to our agents and policyholders. Assurity has had a strong presence in the disability marketplace and introduced one of the first critical illness policies to the industry. We also have a broad life portfolio and fixed annuities. Now, our qualified underwriters hold over 100 years of combined experience, and the sales department consists of product experts, exceptional sales support staff, and training specialists for agents and marketing organizations like yourself. Today, Assurity employs nearly 400 home office associates and provides worksite and financial products and services to customers nationwide. We take special pride in our 120-year legacy of carrying out our mission of helping people through difficult times. As I mentioned, we are a mutual life insurance company, and as you can see, we have a wide and deep portfolio of life products. We offer both simplified and fully underwritten options. So whether you're a P&C agent, a health agent, or an experienced life insurance professional, Assurity has something that will help you grow your business. All right, let's start off here with the Nonmed term, which is the cornerstone of our life products. Do you have clients that are looking for fast, easy, affordable term insurance that does not require an exam? Assurity offers a fully underwritten product on a non-medical basis. It has competitive premiums, maximum rider flexibility, and conversion options. Now, it's all in the name. Term insurance on a non-med basis up to $350,000. We have 10, 15, 20, and 30-year plans, and the minimum face amount is $50,000. This gives you the option to customize a plan that is right for your client. Now, you may be curious as to what exactly is non-medical underwriting. The product was designed so an underwriting decision can be based on the application, motor vehicle registry, or an MVR, MIB, and a prescription drug check. This is not an accept or reject decision. It is not a jet issue product. Assurity wants to give your healthy clients the best premium possible which is why we underwrite this product from a table 0 to a table 8. We all know that different clients have different needs. Assurity recognizes this fact and offers a number of riders to meet these needs. The monthly disability rider is commonly added as an inexpensive way to obtain income protection. Also, the return of premium rider is great for individuals who want to receive their premiums at the end of their term. The ROP rider is available on the 20 and 30-year terms. One of Assurity's most popular riders is our critical illness rider, which we'll discuss in more detail in the next slide. The CI rider pays a lump sum upon diagnosis of a covered condition, which we'll show you on the next slide. One of the advantages of Assurity's CI rider is that it pays in addition to the death benefit, where most CI riders only accelerate the death benefit. This is important because why would someone want to accelerate their death benefit at a time when they probably will not be able to afford new coverage or qualify for it? Another advantage is that the individual can receive the benefit up to 3 times. Compare this to the typical rider that is considered a one-and-done rider. Now, if you look at this slide, you can see the covered conditions. Remember that the insured could potentially receive the benefit up to 3 times. For example, if they were diagnosed with a heart attack, they would receive the benefit. Category 1 is then done. However, they are still covered for conditions in Category 2 and 3. If 2 years later they're diagnosed with cancer, they would receive the benefit again. If they are real unlucky, and let's say they have kidney failure, they would receive the benefit for a 3rd time. So if you had a $25,000 benefit, this rider could potentially pay out $75,000. Now let's look at an ideal client. First, remember that non-med's term's best rate class is Select Plus. And this is equivalent to a standard rate class on a fully underwritten product you might see from Banner or Genworth. So it is ideal for clients that are looking for smaller face amounts and convenient non-medical underwriting. Also, non-med term is often sold as mortgage protection. Agents often have the CI rider to cover a couple of years of the mortgage payment if the insured is diagnosed with a covered condition. Also, individuals who have minimal disposable income are great prospects. Think about young families, newlyweds, or new parents. Now let me just kind of go over here how this automated underwriting process works. The application, whether it's a paper or an e-app, comes into the home office. The application is then immediately sent to the automated underwriting system, where the 3 checks are run, which again is the MIB, the script check, and the MVR. If there's no discrepancies between the application and the 3 checks, then we can issue the policy as applied for. Now, if something shows up and it cannot render a decision, the case will be referred to an underwriter. A phone call may be required to gather more information, and in cases where there are significant health problems, an APS will be ordered. However, the insured will never have to do a paramed, blood draw, or a urinalysis. Now, LIMRA puts out new statistics every year according to the results of studies they conduct. These statistics definitely reveal the need to review policies with your clients on a regular basis. And if you're not, you're leaving the opportunity for the next agent to come along and sell to your client. Okay, now, so we know the market, we know the product, and we know the need. Let's take a look at how to sell it to your clients. Now, do you know anyone that looks like this scenario we have on the slide? Husband and wife, 35 and 34, 2 children, $200,000 mortgage, and they've got a monthly payment of $810. Okay, after meeting with them, you find out that their immediate concern is ensuring that the family can stay in their home if something unexpected were to happen to the husband. So how would you open a discussion about non-med term and package it as DI and CI mortgage protection? Okay? Here's the question you need to ask. Do you have the new kind of mortgage insurance or the old kind of mortgage insurance? What's the difference? Well, if you look at the old school type of mortgage protection, everyone had a term policy to cover the mortgage in the event that you become a premature angel. The mortgage is paid off, the family keeps the home, they're not put out on the streets. The new type of mortgage protection is still having that term policy to cover in the event of death, but adding a DI rider and a CI rider. Now, why do we do that? Well, because of advances in medical technology, those things that used to kill us, we now survive. In 1950, 80% of the people that had a stroke did not survive. Only 20% of the people that had a stroke in 1950 survived. 60 years later, in 2010, it's the exact reverse. 80% of people that had a stroke in 2010 survived. 20% did not. So, because of that, we have the protection for the home if we die, but what if we don't die? This is where the DI and the CI comes in. CI is there, as we mentioned in the previous slides, to give you that lump sum to use however you want in the event that you have one of those critical illnesses. And DI is there, disability income, in case you're off work and need help paying those bills. Okay, here's the question. If you're diagnosed with cancer, would you rather lose your home or lose your mortgage? And here's what I would recommend. Taking Assurity's Nonmed Term 350 with a $200,000 death benefit, which is enough to cover the mortgage, a $1,200 a month DI rider, which again is enough to cover the mortgage for 2 years if the husband becomes disabled, and a $30,000 CI rider, which is enough to cover the mortgage for the two of them if the husband is diagnosed with a covered condition. Pretty good plan, and it's $76.45 a month. Now your clients may say, you know what, I've got an $810 a month mortgage payment. I can't afford another $77. Well, let's take a look at it a different way. Mortgage A is their current mortgage, and as you can see, the mortgage stays the same whether they're living and healthy or if an unexpected death occurs. If the husband becomes disabled and can't work, or if the husband is diagnosed with a critical illness. Mortgage B does cost a little bit more. However, let's look at the additional benefits the client receives. If an unexpected death occurs, the family will have enough to pay off the mortgage. If the husband becomes disabled, he will have enough to pay for the mortgage for 2 years. If he's diagnosed with CI, he will have enough to pay the mortgage for 2 years as well. Make sure you present this to both the husband and the wife, because this is a very affordable way to make sure everything is covered. All right, let's look at a different scenario here. Let's look at income protection. Same family as before. However, when meeting with them, you find out their biggest concern is to maintain their current lifestyle if something unexpected were to happen to the family. How would you open up a conversation about income protection? Okay, if you had a goose that laid golden eggs, would you insure the goose or the eggs? Now, everyone says the goose, but let's look at the reality. We insure our house and our car, but we wouldn't have these if it wasn't for our ability to wake up in the morning and earn an income. Make sure you're insuring the client's goose. And I'm sure if you think about it, most people have homeowners insurance. They have car insurance. They may even have mortgage protection. But are they protecting their ability to earn an income? Here's another way to look at it. If you're sick or injured and couldn't work, or if you were to die prematurely, how would your family pay your bills? Okay, here's my recommendation. Again, an Assurity Nonmed term policy with a $300,000 death benefit, which is 5 times his annual income of $60,000, $3,000 per month in a DI rider, which is 60% of his monthly income, and remember, that's 60% of his monthly income before taxes, and a $30,000 critical illness rider, which again is 6 months of income. And the cost is only $94.84 a month. Now I know you're probably going to get that same argument that, you know, that's another $95 a month that I can't afford. Here's how you can present it. We have job A and job B. Now job A, the client makes $60,000 a year, or $5,000 a month. But remember, again, this is before he pays taxes. If an unexpected death occurs, his income stops. If he becomes disabled, his income stops. If he's diagnosed with a critical illness, his income stops. Now with job B, it's the same job, same income, minus the cost of insurance. It's a little bit less, but it's still a good salary. But look at the additional benefits. If an unexpected death occurs, the family will receive enough benefit to replace the income for 5 years. And again, remember, you're paying taxes on that $60,000, so you can probably stretch it a little bit farther. Okay? If the client becomes disabled, he'll receive $3,000 per month for 2 years. If he's diagnosed with a critical illness, he'll receive a lump sum that can replace his lost income for 6 months. As you can see, the benefits associated with Job B far outweigh the cost with purchasing the insurance. All right, Term 350 Plus. This is a product that is for face amounts of $350,000 and $1 and up. It is also a fully underwritten plan, but it does have a Paramed urine and blood. Same term periods as before, 10, 15, 20, and 30 years. The issue ages there, 10-year is 18 through 74. Now, where this comes in handy in the mortgage market, because of course, people looking, between the ages of 66 and 74 are still buying homes, still needing mortgage protection. So in this case, for those ages, the minimum face amount is $100,001. So how many folks do you know that can still get a term policy for 10 years between the ages of 66 and 74? The underwriting classes are preferred, plus, preferred, and standard in both non-tobacco and tobacco classes. The riders we have on this product are just like the ones we have on the non-med term. We do have the critical illness term rider, the disability income rider, return of premium rider, and of course the other insured rider. Why Term 350 Plus? The biggest reason I see here in this market is because of that $100,001 for ages 66 to 74. The fact that it has living benefits just like the non-med term product does, and the fact that it is convertible. Okay, so who buys 350 Plus? You've got folks that may be on a limited budget in those older ages who need a lower face amount. They may have higher insurance needs than the non-med term 350 can provide. And of course, they want to protect against death and life by having those living benefits. All right, AxiFlex is a very straightforward product designed as a low-cost alternative to traditional life insurance. Now, this product will pay a death claim in the event the insured dies due to an accident. Examples of an accidental death would be a car wreck, boating accident, a motorcycle crash, ATV rollover, something like that. Underwriting for this product is very easy as it is non-medical. In fact, the only health question in the application asks is if the insured has HIV. Now, AxiFlex is available to those between the ages of 18 and 60 with issue amounts ranging from $50,000 up to $250,000. Now, we'll get into the accident-only disability rider in a minute, and you may add a return of premium and waiver of premium riders as well. The waiver of premium rider states that if a disability lasts 6 months or longer, Assurity will refund any premiums paid during the disability and prior to the approval of the claim. Return of premium, simply stated, is if the policy is terminated for any reason other than death, percentage of the premium paid for the policy and riders will be returned to the insured. The accidental disability rider can be added to provide additional coverage. We strongly suggest adding this rider as it protects the insured's income in the event of a covered disability and adds a living benefit to the product. As you can see, the insured may qualify for a monthly benefit of up to 60% of the gross monthly income if the insured becomes totally disabled as a result of a covered accident. It is important to point out that these disability benefits can continue for up to 2 years, and they do have a 90-day elimination period. The return of premium rider is great for people who want a portion of their premium returned upon policy lapse or cancellation. Benefits are payable starting in policy year 6, with the percentage return increasing gradually while the policy and a rider are in force. As you can see here, AxiFlex is pretty much affordable for everyone. You can see this example here with a number of different riders on it, but just look at the base policy amount. For someone 45 years old, $200,000 of benefit for a male, it's $16.46 a month. And for females, it's just as good, if not better. Age 45, it's $12.23 a month. Now, AxiFlex is competitively priced with rates that stack up against any carrier in the industry. In addition, our accident-only disability income rider allows your client a level of protection unparalleled in the accidental death insurance market. Now, who is the ideal client? This is a great option for individuals who perform various manual duties, especially vocational drivers. It's also a valuable alternative for individuals who cannot qualify for traditional life insurance or disability income insurance for health reasons, and is a low-cost substitute for those who cannot afford the premiums that are attached to conventional life insurance products. Property and casualty agencies have had great success marketing this product to people that they sell insurance for motorcycles, boats, and ATVs. Now, accidental deaths do happen, and here are some examples of some actual claims for AcciFlex experienced by the policy owners. As you can see here, some of these policies were not in force very long, and the accidents that happened were just things that obviously were accidental that they weren't expecting. And accidental disabilities occur as well. As you can see, one cannot predict when a disability will occur. It's important to protect your client's most valuable asset, and an accidental DI rider can help accomplish that. The thing I like about this is you look at that time in force. Now, granted, we have examples that we pick out, but a lot of these folks, policy was in force 7 days, and she had a car accident and got disability income from having this policy. Now, Assurity's AcciFlex product can be positioned a number of different ways to your potential client. It can be sold as mortgage insurance for a young homeowner whose main concern is protection against an accidental death. With our DI rider, it can also be used to offer individuals not normally eligible for disability insurance a level of protection should they suffer a disabling injury. It can be used as a low-cost safety net for young families that cannot afford traditional life insurance. Finally, it can be sold as a last opportunity for traditionally uninsurable individuals to purchase life insurance. Now, one of the nice things about the AcciFlex product is it does qualify for our Assurity Advantage service guarantee program. This product, if you use an e-application and have that e-application in before 1 p.m. Central Time, that policy is going to be issued the same day. And that guarantee is 2 days on paper applications. If you submit that application and we do not meet our guarantee, you will get $100. Now, I know Ogletree is a great place to go for information. If you do need additional information or have questions, here are the phone numbers for our New Business Contact Center. The main one you want to remember is that 800-276-7619, extension 4264. The New Business Contact Center can help you with a variety of things. Illustrations, pre-screens. If you've got a client, you know a little bit about their health history and you're wondering how it would be looked at in underwriting, you can call that number, give them the information, tell them you're looking at a Nonmed Term 350 or whatever product you're looking at, and they can tell you how it would be viewed in underwriting. It's a great way of finding that out prior to taking the application and possibly having it declined because of medical reasons. Our Client Service Center is the area to go to for in-force policies. They can help you with policy change questions, claims, and any in-force policy inquiries. And of course, we've got all the different departments there that you might need, including ordering supplies, licensing and contracting, going through our website, illustrations. Again, there's that 800-276-7619 number to call, and extension 4264 is your best bet for someplace to start. Now, with any organization, any company, we like to reward you for your hard work in selling our products. Every year, Assurity offers a conference trip, our Conference of Leaders. And this year, actually tomorrow morning, a lot of folks here and a lot of agents are on their way to Bermuda. That's where this year's trip is. Next year's trip, which the qualification period started January 1st and runs through December 31st, is for a chance to a trip to go to Rome. Now, this is supposed to be one of our best trips ever. My understanding is that they have lined up a number of tours and a number of visits to places that the average tourist does not get to. I understand they do have lined up a tour and a visit of the Vatican. So if you have any interest in going to Rome, I will be sending the qualifications to David and Doug, and they can certainly pass those on to you. The nice thing is if you're not currently appointed with Assurity, there is a prorated amount that you would need from April 1st forward, so that you don't have to earn the total amount for the year if you're just getting started with it. Again, as I mentioned, the folks there at Ogletree are great at helping you out with your product questions, illustrations, anything you might need. If you do need further assistance, my name is up here as the Regional Sales Coordinator for the Southeast. I'm still going to be transitioning from that position through the end of the month, so you can always call me. Or Nick Yasa is the Regional Sales Manager, the external that is out on the road for most of the time, but he can help you as well. And with that, that ends the presentation, and I'd be more than happy to answer any questions that anybody might have.
John, we're not able to open that